Hey everybody, this is Christian Mataraz. I'm the instructor for the college accounting, the Zwicker Slater textbook, Canadian 12th edition. And I just wanted to do a quick video. This will be less than 30 minutes, so you don't need a lot of time to listen to this. I just wanted to quickly talk about chapters 6 and 7. This is the introduction of the special journals. And it's at this point in the course where there's a shift in the way that we do the bookkeeping entries. So up until this point, most of the journal entries, well, actually everything that's been done up until chapter 6 has been recorded through the general journal. So the general journal was used to record every single transaction in a two-column format, debits and credits, recording sales, recording checks being written, recording accounts receivables, all sorts of stuff going through there. And now that we've experienced that side of it, we're going to introduce the special journals. The purpose of the special journal is that it really helps to improve the efficiencies within the accounting system. So there's going to be 4 types of special journals. There's the purchase journal. Actually, I've got the slideshow open, so I'll just pick and choose the slides I want to show you for this. So there's 4 types of special journals: a sales journal, cash receipts journal, a purchases journal, and the cash payments journal. Now, the thing with these journals is that whenever there's a sale on credit, which means it's triggering an accounts receivable, so not a cash sale, whenever there's a sale on credit, you'll record it in the sales journal. Whenever there's a purchase on credit, so in this case it's triggering an accounts payable, you put it through the purchase journal. Or to put it another way, anytime you receive cash, anytime the company is receiving some form of cash, it will go into the cash receipts journal. So that could be cash being received from a client, a customer paying their bills, so paying off their accounts receivable. It could be money at the end of the month, or maybe it's every week, from cash sales being recorded. It could also be investments by the owner or the partners, and they're investing money into the company. The company is receiving cash. So those transactions all go into the cash receipts journal. Likewise, anytime money's being paid out, so any sort of cash being paid out is a cash payment. So it could be paying for an accounts payable bill. So perhaps I had my TELUS bill that came in, my telephone bill, and that came in, but I didn't pay it for 30 days. So I recorded the bill at the time. I matched the revenue, matched the expense with the time that it was incurred. And then later on, I actually pay the bill out. So the initial purchase would have gone into the purchases journal for the TELUS expense. For the telephone expense, I would have said an accounts payable, TELUS expense. And then the cash payments journal, when I actually pay the bill, write the check or do the bank transfer, would go into the cash payment side. This chapter also goes through calculating sales discounts and things like that. That takes some practice getting used to. Just remember, when you're going through the sales discounts, when you're looking at the discounts, keep your eyes out for credit memos. That's the big hint in this chapter. So very often there'll be accounts receivables, but then in the transactions there'll also be a credit memo that's occurred. So keep your eyes open for those credit memos, because that's where people will slip up and give too much of a discount. So just to give you an idea of what some of these journals look like, here's the sales journal. Now this is a very, very basic example of a sales journal, but in reality, sales journals are a very basic transaction. They look very, very simple. So when you're recording in the sales journal, you would record the date, record the accounts receivable account number, so the customer, the invoice number, and then you would record the sale amount, and that's it. Okay, you're just journalizing the transaction. You're not actually posting anything. So in this slide, it actually shows the end process, but what's happened is you've just journalized the transaction. Now the next step that you do after journalizing this transaction, this check mark under the posting reference symbolizes that you've actually posted this $600 credit sale to this customer account. So at the time that these occur, you should record those into the customer accounts right away. That should be the first thing that you do. So on April 18th, I write down that Kevin Stone Company I had a sale with them, invoice number 1. I go to their subledger account. So under accounts receivable, you'll learn that every account has a subledger account. I record that $600 sale and I put a check mark, and that's it. I don't do any posting to the general ledger accounts, only the subsidiary ledger account. And presumably there'd be a lot more other sales, but in this example, there's only 2 sales. On the 19th, Bill Valley Company, I sell him something for $900. I go to their subsidiary ledger. I record the $900 sales in the subsidiary ledger, put a check mark. Okay, so here's the transactions. I haven't recorded this stuff yet though, under the controlling accounts. I've only, on the day-to-day basis, I've only put in the subsidiary ledger accounts. At the end of the month, this is called cross-footing. So at the end of the month, I go through and I total up all the columns that I have. So the sales journal is easy. There's generally only one column in the sales journal. I add up the sales, I have a total, and then I take that $1,500 total in this example. I go to my general ledger account 112, and I record a debit to 112. I come back, so I record it in the general ledger account. Under the posting reference, I would put in SJ1. Now, they don't have a good example here because they're using T accounts, but you'll figure it out. And then I come back, and in brackets, I say I went to account 112. Then I say there's also sales. The sales will be credited to account 4112. I don't put this down yet. First of all, I go to my general ledger account. I record the $1,500. Under that posting reference, I say it's from SJ1, Sales Journal, page 1. Then I come back and I record account 412 in brackets. That means it's been posted. So the process is every single time there's an entry, you immediately post it to the subsidiary account only. Then at the end of the month, you add everything up. Then you record that total to whichever accounts they're going to. So in this case, this total goes to 2 different accounts, a debit and credit. Always make sure you're balanced. $1,500 goes to account 12, so I write it in the general ledger. Then I come back and say where I put it. So I put it into account 112, so I come back and write 112. Then $1,500 goes to sales. I go to the general ledger account. I write it into the general ledger. I say it came from sales journal, page 1, which is here. And then I come back to the sales journal, and then I say that it went to account 412. So the next thing I wanted to show you is a credit memo. So the thing with credit memos is that they don't fit into any of the special journals. A credit memo is not a sale. It's actually a sales return. So it doesn't go into the sales journal. It's not actually a payment of cash or a receipt of cash or anything like that. So it doesn't go into any of the cash receipts or cash payments journal, and it's not a purchase, so it doesn't go into the purchase journal. What it has to do is it's one of the few entries now that will be in the general journal. And the process is the same. If there's a sales return, I go into the general journal now. I would write down sales return. I wouldn't post anything yet. I would just put in the numbers, 304. And under accounts receivable, I would also say 304. Now, at this point, it's important that once it's in the journal, if you choose to be doing your posting, you can do it right on the spot. And I like to do that. As soon as I do a journal entry, I post it right away so that everything's up to date. So I've noticed throughout the courses, throughout the years I've been teaching this course, that students will get a little bit lazy in their posting process. So I'll give a quick 1-minute demo verbally on how to post things. So the first thing you do is you journalize the transaction. Journalizing the transaction means that you're writing down the description, you're writing down the amounts. You don't have any posting references yet. I'm simply writing down what happened on that day. When it's time for me to post the transaction, I say, okay, this transaction says $304 went to the sales returns and allowances account. I turn to my general ledger book, to that page where it has account 412, and on one of the lines, I write down $304 sales return. Then in the posting reference on the general ledger, I would write down that it's from general journal page 1, so GJ1. Then I go back to my general journal and I write down the number 412. that symbolizes that I've completed the posting process. So you don't write down this number until you don't write down the posting reference account number until you've actually written that dollar figure into the general ledger. Same with the accounts receivable. I go through and I say, okay, accounts receivable, Jay Walters' account is going to be credited for $304. I go to his subsidiary ledger account. I write down $304 credit memo, say it came from GJ1, come back to the general journal page, put a check mark. Then I go to the accounts receivable main account and write down $304 on the credit side as a credit memo, say it came from GJ1, then I come back and I write it down as 112. So the reason that I'm really, really picky with this process is because in a manual system, if you cheat this process, this is where you will find that you spend a lot of time at the end if you're out of balance, because life gets in the way. So imagine this scenario. You finally put your kids down to bed, or your boyfriend's gone or your girlfriend's gone, or it's just a nice quiet time where you have a moment to catch up on this homework after a long day or a long week of work, and you're tired and you just want to get this stuff done. So you start working away at it and you're going through this process and you're writing this stuff down. And I say, okay, here's the sales return entry, and there's $304 and $304. And then I go, okay, you know what? I know this is going to go to account 412. So I write down 412 and I write down 112 and a check mark. And then I go to the general ledger page and it's like, okay, I'll go to the sales return part and I go to account 412 and I write down $304, and then the phone rings. So the phone rings and I go grab the phone, and it's my mom, and she's sick, and she's saying, you know what, I just need you to come over just for a minute. And I say, you know what, I'm right in the middle of homework, Mom. I can't do this right now. But if you're really, really sick, I'll come over. And she goes, well, no, I'm just feeling bad. It's like, oh, okay, it's too bad. But because the phone rang, now my kids are crying. So my baby's woken up. So I'm like, oh, shoot, my baby woke up. And well, while I'm up, I may as well just grab a quick drink. And then I come back down. The cat's been on my desk, and the cat's mucking around with stuff. And my pages are falling down, and my cat's sitting there with a smug grin on her face. And I just went, okay, I've got to pet her because otherwise she'll be up on my lap all night disturbing me. And I finally get everything settled down. It's been a half an hour. I sit back down. I say, okay, sales return allowances. Yeah, okay, let's do the next entry. And what I've forgotten to do was actually complete the entry by doing the accounts receivable part. And because all this stuff gets in the way, and because this symbolizes, so the 412 and 112 in this posting reference column tells who's ever auditing this, who's ever reviewing this work, that these numbers have already been recorded. So don't cheat this step. It might feel like you're saving some time just by writing the account numbers down, but I can assure you that when you get later on in the course, and if something happens and you've cheated the system like this, if you've said, you know what, I'm just gonna save this 1 second for every entry, you'll end up spending hours trying to find that mistake. Or you'll be sending me a message saying, I'm out of balance. I've been looking at it for an hour. I can't find it. And then you'll get my response saying, you know what? Double check your posting. Go through every single entry until you find it, because I won't just give you the answer. It's tough love. This is a learning experience. Now, the nice thing with computerized systems is that this stuff is all manual. However, sometimes the computerized systems, I've run into problems with them as well, where I've gotten some older versions of software that haven't been updated properly, or something haywire goes, and the trial balance is out of balance. And I've had to go through and actually manually check every single journal entry against the general ledger to see where this entry happened. So it's not often, but it does happen. Cash receipts journal. So here's another example of the journal. In this short video, I'm only going to talk about the sales and the cash receipts journal. Maybe I'll do the purchase side as well. I'll see how much time I've got. It's the same thing in this journal. So these journals are set up with a number of columns. Now here's another thing. These columns that are set up, you have freedom to set up as many columns as you want to have. Because the nice part about these systems is that we're only ever going to be posting the totals at the bottom. Now, the nice thing about it is that you can streamline. You don't have to have, a 26 or 40 column book to track these cash receipts, because most of the time the cash receipts are only going to be coming from a few main things. So in this example, the cash receipts are either coming from people paying off their bills or cash sales that occur. To sort of make things more efficient, if there's only a few odd items every month, we also have this area which is the sundry area. So you would set up the columns with the items that you'll be using most often. So in this example, sales, accounts receivable, and they also offer sales discounts, so they have a column for that. However, under the sundry, this is where there'd be cash receipts for things that just aren't that common. And in this example, the very first entry happens to be an investment by the owner, whose name is Bennett, and they put $3,000 into their business. So the entry comes down, $3,000, goes in the cash side, $3,000. That's it. Now, there are some instructors and some feelings that whenever there's an entry that goes across and is in the sundry accounts, that should be posted right away. But I don't agree with that, because the idea for these special journals is that you only ever post the totals at the end of the month. If I'm going through and if I'm posting one of these special accounts, so in this example, I'd be putting $3,000 into the equity account, but there wouldn't be the offsetting side, the other side of the entry. So I'm not too keen on that. I am keen, however, if there's a transaction that involves a client, a customer, recording that right away so that their accounts are always up to date. But when there's special posting references, just be cautious. You don't necessarily have to post them immediately. You can do the posting to those accounts right at the end of the month when you do the totals. So the process is the same as a sales journal, and it'll be the same for the purchase journal. It'll be the same for the cash payments journal. What you do is record the transaction. So whenever there's transactions, in this case, they'd have weekly cash sales, it looks like. So at the end of the week, they've run off this tape and they say there's $500 of cash sales. So they record the entry, $500 credit, $500 debit, very similar to the general journal entry, but you don't post it. So the common mistake that I see with students as they go through this level, they're so used to doing the general journal, is they start posting right from this stuff. Don't do it. This is why it saves time. You don't have to go through and post every single row. You just have to journalize it. So you journalize this entry. It's a cash sale. You say posting reference. You put an X through it to say there's no subsidiary account posting reference. There's no other spot that it's going to. It's already got the spots in the debits and credits. They'll get posted at the end of the month. Then there's some credit sales, there's some receipts of cash from credit sales. So in this example, Smith Company paid their bill. They paid within the 10 days. And on their invoices, they were getting a 3%. There's some text at the bottom that you can read. So for the $400 sale, they received a $12 discount. When you're looking at these transactions, think about two things. So the first thing you think about is if they've paid off an invoice, that whole invoice amount has to get credited to their account. It can't just be the net amount. The whole amount has to get credited. If it says that they paid $388, then you say, you know what, that's how much cash I got. So whenever you're going through these transactions, ask yourself, what do I know is actually happening? If they've paid off their bill in full, it'll say that in text, they paid their bill in full. You look at that bill, that dollar figure is paid off in full. Whatever's in their accounts receivable is paid off in full. So you take that out. And then you start working out the discounts in the cash received. Or if it says that so-and-so paid off their bill by paying $388, you know that that's my debit to cash. I've received $388. So I can have that $388 and then figure out my discount from there. Or you can go through and do the math. It says they paid off their bill in full and they took the discount. So you take 3% discount on the $400, that's $12 discount. Then you do the simple math, 400 minus 12, 388, and record the journal entry. So it's the same thing. We're just journalizing it. We're not posting anything. And this short month, it looks like, maybe went on vacation for 3 weeks at the end. So we had another sale. For the sale, record it immediately to the subsidiary accounts for the accounts receivables. I mean, whenever they pay off their accounts, not sales, the receipt of the cash from the sales, record those immediately in the subsidiary accounts. And the reason being is that very often in a business, customers will phone up saying, how much money do I owe you? I want to pay. And if we don't have these subsidiary accounts updated immediately, we may tell them that they owe too much money or that they don't owe enough money at the end. So whenever there's sales or whenever there's subsidiary accounts involved, you do post to those on the same day that the transaction occurs. So at the end of the month, I add up all my columns. So I crossfoot the totals, which means I add up my debit column. So I add up these two debit columns. I add up my credit columns. And then I do a double check. I want to make sure that I didn't miss anything. So I make sure my debits equal my credits. I add up the two debit numbers and I add them together and I get 4,800. Then I add up my three credit numbers. I add them together, I get 4,800. Debits equal credits, 4,800 and 4,800. Do that whenever you're doing this stuff before you start posting the totals. This will save you a lot of time in the end as well. So, sundry account, these things get posted individually or not at all, or to subsidiary ledger accounts. So the totals do not get posted. So you put an X in the bracket at the bottom. When it's time to post the columns, here's the process. I add the columns, I crossfoot the totals, so add up the debits, add up the credits. Then I take 4761, I go to my general ledger page, I record that I have cash in the debit column of 4761. Under the posting reference in the general ledger, I say it came from CRJ page 1. So this is CRJ page 1. Cash receipts journal, page 1. Then I go back to the cash receipts journal, and at the bottom of that page, that column, I write 112. And I know that that column's been posted. Then I go to the next column. I take $39, I go to the general ledger account. I write down $39. In the posting reference, I say CRJ1. I go back to the cash receipts journal, and I write down the account 430. And I continue that process. I go to the accounts receivable. I go to the column, the credit side. I write the number $1,300 down. I say it's from CRJ1 in the posting reference. Then I go back to the cash receipts journal, and at the bottom of the column, I write 112 for the account number. Then I do the sales. I go to the sales journal. Under the credit side, I say there's a $500 credit. I say it came in the posting reference from CRJ1. Then I go back to the cash receipts journal. At the bottom of that column, I write down 410 to say that's where it went. So the posting process, and it's a process. If you do it correctly, you'll never be out of balance, and it will save you time. If you decide to cheat this and say, I added up all the columns, forget about the cross-footing, I know that my numbers are right, and this is going to go to 112, and this is going to go to 430 or 111, and this will go to 430, and this will go to 112, and this will go to 410, and this one I'm not going to post. And then you start flipping back to your general ledger. And you're saying, yeah, here it is. Here's my cash, and you flip back here and you say 4761, and yeah, it's 4761, and then the sales discount, and that's going to be 400, and there goes the phone again. So you come back and you answer the phone, and you say, okay, so I remember doing the sales journal. And yeah, so I'll go back and I'll do the accounts receivables side and 1,300, and then I'll just post that there. And did you actually write down that sales discount number or not? Or do you have to double check? Or was it a short phone call? There's so many things that come up. And whenever people are out of balance, 9 times out of 10, it's because they tried to cheat the system and take a shortcut at the time because they were feeling rushed. If you just get in the process of doing it, you're saving so much time by not having to, first of all, post every single line like in the general journal. Doing the columns at the end and just going through the process, take the number, go to the general ledger account, record the number in the general ledger, say where it came from, CRJ1, then you go back to cash receipts and you say it went to 111 end. That's the end of the process. You'll never make an error in the posting anyways. There might be some math errors, and that's where you'll find them, the cross-footing. There might be some transcribing errors where the number is 739, but you wrote down 793 instead. Yeah, those things happen too, especially when you're tired and rushed. But you know what? That's pretty much it. So I think I got this down to about 20 minutes for the video, so it's not too bad at all. The only other thing that's introduced in Chapter 6 and something similar in Chapter 7 is the schedule of accounts receivable. And this is another way to double check things. So when you have your main accounts receivable account, but you also have all your different customer accounts that you're posting the entries to individually, so you know how much each customer owes you. At the end of an accounting period, you'll go through and look at those subsidiary ledger accounts and record how much money people owe. So in this example, it says that there's client Q Adams, client B Meredith, and client J Walter. And this is how much money is owed: $3,500, $800, and this one looks like they had a sale, but then they paid it off. So the amount owing is $4,300. I would add up that schedule of accounts receivable, which looks like this. It's basically just a listing of all the different customers. And I compared that total to the total that's in my control account for accounts receivable, $4,300. So by doing that, that's one way of double checking that I didn't miss anything in my accounts receivable in the client account. Okay. So yeah, I think that's it. I won't go into the purchase journal because I wanted to keep this video short, but if you have any questions, go into the discussion room and leave them. Hopefully this answers some of them, and we'll help it so that when you're going through this work, as we go through the chapters, it doesn't get too onerous and you don't make mistakes that you'll be spending 5-10 hours trying to figure out. Because to me, that actually breaks my heart. Most of this stuff, when you get into the process, most of these assignments should take less than 2 hours a week to go through, maybe 3 hours a week for the bigger ones, but they shouldn't take that long. When I hear students saying that it's taking them 5 or 6 hours because they're trying to find a mistake, my heart breaks, because it's something that can be avoided just by spending a little bit of extra time and caution as you're going through. So that's it. That's all I've got. I'll just end this meeting now and have a great week.